finally, Friday night. What do we get to eat? Some pasta, elbow macaroni. We got some Kodiak cakes, a banana. This is not looking too good. Oh my God! Guys! How'd you get in my house? Is there a door open, the side door or something? Well, now that you're in my house, I might as well just tell you why you should be investing in the stock market in 2019. And for all you guys that are beginners out there, new to the stock market, stay tuned to this video and I'll tell you ample amount of reasons on why you should be putting your money into stocks in 2019. So let's get started with today's video. So let's keep it very easy and simple, guys. Let's break it down into 2 reasons why you should be investing in the stock market and why you should start investing in the stock market in 2019. The first reason being to create a passive income source for yourself, and the second reason being to generate wealth for yourself and for your family in the long term. So you may be asking yourself, how can you even make passive income in the stock market in 2019? And my simple answer to this is by investing in dividend paying companies. And before we even talk about dividend paying companies, what is passive income? Passive income is pretty much making money without physically putting in your time, without physically having to be somewhere, right? Without trading your time for money. You pretty much have an income source coming in on the side while you can be at the beach, you can be at your house, you can be playing Xbox. Pretty much you get the point, right? You don't have to actually put time in. You don't have to put your time and physically be somewhere to make money. So how can you do this, right? How can you make passive income in the stock market? Well, pretty much by investing in dividend paying stocks. So for those of you guys that don't even know what dividends are, it's a form of payment that a company can give out to its shareholders either quarterly, yearly, or sometimes even monthly. But most companies pay this out quarterly. And how this works, guys, is pretty much a company is making money, profits, revenues. They have cash on their balance sheet, and they either have the choice of reinvesting that money into the business, research and development, buying out some other businesses, expanding somewhere else, right? Or they can pay out some of that money to the shareholders in forms of dividends. And this is pretty much like a thank you for holding the stock. A lot of people view it this way, and it's okay if you view it that way, because I personally view it that way too. And it's a very cool way to just make money without actually having to do anything, guys. You pretty much do your research on a company, make sure everything is looking absolutely in line with that company, the fundamentals, the financials, everything that we talk about on this channel. And pretty much when you buy into that company, you're making money on a quarterly, monthly, or yearly basis, however it works for that particular company. And not every company does pay dividends, but those that do, they're either paying between 2% at the low end, pretty much like 1.5% at the low end, all the way up to 10% per year. And how this pretty much works, guys, is that let's say you own 200 shares of a company that's paying out, let's say $2 in dividends per year. You're pretty much getting $400 in passive income per year simply by just owning a particular stock. And a lot of people would not even think that that's a lot of money, but just think about it, guys. If you have $1 million and you're invested in a bunch of different dividend stocks, just think about how much money you'd be making just simply off a 2 to 3% dividend yield on an investment. Just think about that, add up the numbers, and they really, really do add up as the time goes on. And a way to make even more money on top of this, guys, with dividend investing, let's say you don't even use it as passive income. Let's say you just reinvest it back into the company. And for example, guys, if you're getting, let's say, $400 per year in dividends from a particular company, instead of spending that money, instead of withdrawing that money from your account, let's say you just put that back into that stock, buy even more stock, and then the next quarter, you're going to accumulate even more in dividends. And this is something known as compound interest. And just think about this, guys. If you keep doing this
every single quarter that you're making money from your dividends, you're just buying more stock with the dividends, buying more stock, just think about how much money you're going to have in 20 to 30 years. And this is the number one reason why you should be investing in 2019. A, you should be building passive income for yourself, and you can either spend that money or you can reinvest it, right? Either way, you're going to be making a financial gain in terms of investing in the stock market, which is what we want to see for everyone, right? And the whole idea of compound interest kind of branches off into the second reason on why you should be investing in the stock market, being, growing wealth for yourself over time in the long term and for your family. Because I don't know about you guys, but for me, I know I want a family in the future, and I want my family to be financially stable even after I'm gone, right? Generations, down the line, I want to make sure that I grow a big plant, right? Plant a seed and grow that. That's a very good metaphor for the stock market, right? I want to make sure I'm doing that, for my family and for myself over the next 20 to 30 years. And you don't only have to, be a dividend investor. You can also have a strategy that focuses on growth companies, right? Because not all stocks out there are dividend paying stocks. There are some companies that are growth companies like Netflix was, like Tesla. These companies are focusing on reinvesting back into the business and not necessarily paying money to the shareholders in forms of dividends. So what I would recommend, guys, and what I personally do is I have a bunch of different portfolios in the stock market, right? I have one dividend portfolio where I'm doing compound interest, reinvesting the dividends back into the companies, right? Buying more shares so I can accumulate even more and more money over time in forms of dividends. I have a growth portfolio where I'm focusing on rapidly growing companies that I see the vision for, that I see the future for, that don't necessarily pay dividends, but they're reinvesting their money back into the business so they can grow and propel to the next level, which is going to end up pushing the stock price up, which is going to mean massive gains for me, or at least I hope so, right, guys? And then I have a value investing portfolio, which is a lot of dividend paying companies and a lot of companies that are quote unquote safe, right? Value companies like Micron, like Johnson & Johnson, like Procter & Gamble. Let me just name some off the top of my head. McDonald's, right? Apple. Even Apple's considered a value company, guys, in my personal opinion. So, having a bunch of different strategies from dividend investing, value investing, compound interest, growth strategies is something that you need to, accommodate. You need to be able to do this for yourself, to build wealth for yourself, and most importantly, your family over the long run. So I hope you guys enjoyed the video and found a couple of reasons on why you should be investing in the stock market in 2019. So for those of you guys that enjoyed the video, feel free to drop a like, leave a comment, subscribe, join the links down below if you guys want to keep in touch with me and our whole community. I'll catch you guys in the next video. Have a great weekend. Peace out.